Hey guys, on today's episode of Buy or Pass, we're going to take a look at Disney and their most recent earnings. So let's go take a look. Hey guys, my name's Jose and this is another episode of Buy or Pass. In this series, I will look at the financial documents of a company and decide if I was looking for another investment, would I buy or would I pass? Before we start, don't forget to hit that subscribe button to get info on new episodes and other videos. Like I mentioned earlier, today we're going to take a look at Disney's most recent earning, their second quarter for 2019, which they reported May 8th of 2019. Like always, I went ahead and took a read at their earnings report that they posted on their investors website. I also took a look at the transcript from their earnings call. I read through it all and I highlighted all the key information that I got from their information and from the conference. So hopefully I save you guys plenty of time from reading these documents, and you guys just get to look at the top information. So let's start off with the information they posted on their investors website. We start off earnings per share from continuing operations for the quarter increased 81% to $3.53 from $1.95. That was a huge increase on their earnings per share. They continue, that's how they start off, right? They start off with something big, a big banger, and they continue. The next thing they talk about is Avengers Endgame, which is now the second highest grossing film. I think to this day, right now where I'm posting this, it's still the second highest. Avatar still number one, but it's crazy. It's the highest grossing film of all time in just the first few weeks. And they also mentioned that they're gonna premiere it on Disney Plus starting December 11th. So I'm pretty sure Disney Plus comes out in November. That's in no time. I can't wait to see what they have in stores for there. They also talk about their acquire from 21st Century Fox. And again, this is for me, this is another big news, especially with them releasing Disney Plus. One thing that I was worried about, even though they do have a lot of material, is just that they would run out of material. But now buying 21st Century Fox, Hulu, and that matter, their library has increased dramatically. And here they acquire 21st Century Fox, increases their confidence in their ability to leverage decades of iconic storytelling and the powerful creative engines. Like I mentioned, right? So this is just increasing their library even more, which is a huge plus for Disney Plus, which is where they're heading to. So here they talk about on March 20th, 2019, they bought off Fox for cash, and they also did 307 million shares. Next, where are we going? Let's just keep going down to my highlight points. So here they talk about their revenue breakdown. They show it down in a really nice sheet. So revenue this year was almost $15 billion. Huge number, but I just wanted you guys to see how it's really broken down. So 6 million of that 6.2 billion of that total revenue comes from parks, experience, and products, mainly from parks, hotels. Then the next biggest is 5.5 billion comes from media networks. So this is not movies. Movies is under studio entertainment. So studio entertainment is the third at $2.1 billion. But let's think about it, right? Media networks, that's their actual TV shows, not TV shows, but their TV programming channels. And parks make up about $11.7 billion, which is more than 75% of the total revenue. Movies only make up 2.1 billion of that 15 billion. So it's just to give you in perspective, guys, how the actual numbers of the revenue are. So parks and media networks. Media networks does not include movies. But yeah, we can see where that huge revenue is coming from. So here they talk about it. Media network revenue for the quarter were comparable prior year to the prior year quarter at 5.5 billion, and segment operating income decreased 3%. The media network is off to a normal start. Nothing crazy going on there. Let's see what we have to talk. So cable networks revenue for the quarter increased 2% to 3.7 billion. Operating income increased by 2% as well to 1.8 billion. Higher operating income was due to an increase at ESPN. The increase at ESPN was due to higher affiliate revenue, partially offset by increasing programming and production costs and decrease in advertising revenue. Right, so even though they are still losing subscribers to ESPN, it seems like affiliate revenues are paying them more. So that's great to see, right? Cable network as a whole, there's still money in there, even though they are losing subscribers. Broadcasting, the next I want to talk about is broadcasting. Let me just follow. So broadcasting revenue for the quarter decreased 2% to 1.8 billion, and operating income decreased 29% to 247 million. Then they talk about what that decrease was about. In operating income, it was due to higher programming costs, lower program sales, and decrease in advertising revenue, partially offset by higher affiliate revenue from the contractual rate increase. Right, so here broadcasting does seem to have lower program sales and higher programming costs, and this is something that keeps being, it happened in their other network and cable network, is a decrease in advertising revenue. So I wonder if this decrease in advertising revenue is that people don't want to advertise in these channels, or is it that Disney as a whole is keeping this advertising space for themselves? Because I'm not sure if you guys notice, if you guys go watch a Disney movie, if you guys watch Disney Channel, or if you guys watch anything Disney related, all the ads they place are Disney related only. You would never see, you would see very little competitors' products in their commercials. So I wonder if that lower revenue cost is just themselves charging themselves less. So park experience and products. Parks experience and products revenue for the quarter increased 5%. The more people are going into parks. They did increase the prices, and they do talk about operating growth for the quarter was due to growth in their domestic theme parks and resorts, increase at our consumer products business and cruise line, and higher attendance. Higher occupied rooms nights at Hong Kong Disneyland resorts. So here we can see they do mention though that results usually don't include Easter holiday. Normally Easter holiday is on the third quarter, but this time due to how the calendar worked, Easter holiday appeared in the second quarter. So here they talk about operating income growth increased, guest spending more, higher attendance, and occupied room nights at Walt Disney World. So guest spending growth was primarily due to an increase in average ticket price, food, beverage, and merchandise spending. So you can see, right, we've had all this time where we talk about Disney increasing their ticket prices and how it would be a negative for the company. But here we can see, right, there's still a demand for it, so people are still coming and spending money. So I'm really liking how they build their earnings information, right? They actually go through every of their products like we're going through, and they talk about what the major reason for the increase or the decrease was. And I think this is really helpful for investors. It's pretty cut and dry for what's going on in their business. Many other companies don't do this. They just give something as a whole and not break it down through sectors. Or if they do, they don't make it as easy as Disney is doing. Right, so next we're going to talk about the increase in their consumer product business, and it was driven by their growth in game business, but partially offset by decrease at their merchandise licensing business. So their gaming business, they get royalties from the licensed title Kingdom of Hearts 3, which was a huge seller, I think. But that's really received a lot of their consumer product business was driven by there. And then they talked the decrease at their merchandise licensing business was driven by lower minimum guaranteed shortfalls. Not many people, they decreased in people licensing their stuff. But again, why should they license if they can just sell it themselves? Next, they talk about results at Shanghai Disney results were comparable to the prior year quarter, as an increase from higher average ticket price was largely offset by lower attendance. So here we can see, right, this is pretty smart of them. They're increasing their ticket prices, and less people are attending, but they're still maintaining comparable results to when they had a lot of people. So this is definitely, in my mind, it's obviously it's bad for the regular consumer, right? But for as a business as a whole, there are still people that are willing to pay for those high average ticket prices and are able to maintain the business of Disney's resort. And at the same time, if less people are going, then the lines and everything are gonna be less. So it's gonna increase the overall experience for the people. Studio entertainment revenues. So this is the movies, right? This is the movies, and what I showed you guys, it was only 2.1 billion of that whole $15 billion revenue. The studio entertainment revenue for the quarter decreased 15% to 2.1, and the operating income decreased 39%. The operating income decreased by a lot. I hate seeing them putting I hate seeing like these high value numbers of 39%, because their value of income operation is 534 million, right? So compared to the actual revenue, this is pretty low. So a decrease in 15% can equal to a few million, which equals to such a high percentage in actual numerical value. But then they talk about the lower operating income was due to decrease in theoretical and home entertainment distribution. So remember, last quarter, the decrease in theoretical distribution was result to the 2.6. So last year, right? Last year, this quarter, they had Black Panther and they had performance of the Star Wars: The Last Jedi. Where this quarter, they only have Captain Marvel, and they didn't have any Star Wars movies. So obviously, if they didn't have any Star Wars movie and Captain Marvel didn't do as great as Black Panther, it's gonna show lower numbers for theoretical distributions. Then they're gonna talk about on home entertainment again, right? They make it so crystal clear for you. So here they results were due to lower last year, right? Last year at the same quarter, they were already releasing Thor Ragnarok on DVD and Star Wars: The Last Jedi. So here they didn't have any comparable Marvel or Star Wars title. The only significant title they had was Ralph Breaks the Internet, and in which compared to Coco in prior year quarters. But again, there was no real hard hitters this past quarter that would have helped them lift up the. So here they talk about their ESPN Plus, the increase. They had an operating loss increase from 108 million to 393 million. This is actually a huge increase, over 100% increase in operating loss. But again, 393 million is not that much. It doesn't bleed that much money. The increase in operating loss was due to their ongoing investment in ESPN Plus, which was launched in April 2018. Costs associated with the upcoming launch of Disney Plus. So right, they're releasing their own sports version of Disney Plus. They just released it here in April 2018, and they're still investing in it. So I'm not sure exactly how far that's gonna go, but again, they're still investing in ESPN. In the quarter, 100%. So remember, they bought off Fox, which means they got 100% of Hulu's operation. So now they have operating results from March 20th to March 30th are included in these numbers. So prior to March 20th, the company's ownership share of Hulu was reported as equity in the loss of investees. So now we're actually going to see actual numbers being resulted included in director to consumer in an actual revenue segment, where before it wasn't. So that's good to know. Let's see where we're at. Restructuring charges, they just talk about during the quarter, the company recorded charges totaling to $662 million in connection with the acquisition of 21st Century Fox. Let's see what else they have. So that's all we have from from their report that they shared. Next, we'll take a look at their transcript from their earnings report, right? And this sometimes their earnings report talks a lot about what I've explained previously, so those points I'm not gonna highlight. I'm just gonna highlight the most important points that I did not see in the previous slides. So like that again, this is new information, but most of the time, if you guys are reading the earnings transcript, you're gonna see similar information to the information they release to the public during earnings. So here, this is important because I wanted to highlight senior leadership from Fox are now in place. So I think that's pretty impressive, right? They just bought off Fox in March 20th, but obviously this was a segment, something that they were planning ahead of time. So they already had a plan running once they got it. They already have the correct people running, already a leadership in place. So that means they're going straight ahead, and they have everything planned ahead. And it's also pretty good that they have, the second point I highlighted was about Emma Watts from 20th Century Fox is now part of the senior leadership team focused on making movies for theoretical releases. So it's pretty good that they're still using the assets, right? So when they bought off Fox, they bought off all these titles and everything else. But another important asset, in my opinion, are the people working there. So here they're taking a use of Emma Watts, and she already knows the information from 20th Century Fox. So now she's part of the senior leadership team focused on this. So I think that was a really smart move in the leadership style on how they're breaking up. So looking forward, they got a very busy year ahead, including number of major developments in their parks and resorts. Obviously, they're breaking ground on significant expansion at Tokyo Disney Sea in the 21st of May. Is that today? Did that happen already? I want to see how that. No, that's tomorrow. They will also add new theme areas and attractions to the park. And obviously, we're looking forward to the opening of Star Wars Galaxy's Edge on Disney Slide Resort on May 31st. And then we're getting Galaxy's Edge on Disney World on August 29th. Key fact, that's my birthday, so I'm a huge Star Wars fan. So that's pretty cool that it actually releases on my birthday. Next, we have turning to studio incredible film slates for 2019, and now with even more ambition as they have 21st Century Fox acquisitions. So they mentioned some of the movies coming out in between now and Christmas. Aladdin looking good. Lion King looks good. Maleficent, Mistress of Evil, that one looks okay from Disney. Pixar, we have Toy Story, Frozen 2 from Disney's animation, and we have Star Wars Rise of the Skywalker, as well as Dark Phoenix. They also mentioned a lot of other movies. Some I'm not too familiar with. I just mentioned the big banger ones, but it's needless to say this is an exciting time for the company. They are releasing a lot of movies, but remember how we saw that movies don't really relate to such a huge portion of their revenue. But it's good to see these amount of movies coming out, because in the long term, right, this is gonna add products for their Disney Plus service. It's gonna add revenue from their merchandise, from their licensing and royalties and other stuff. So it's great that they are producing plenty of content. Let's see where we're at. So now we're looking at third quarter. They're expecting operating income from direct to consumer business to reflect full consolidation of Hulu's result, the continued wrap up of ESPN Plus, and ongoing investment in Disney Plus. As such, they expect direct to consumer business to have impact of the year over year change in segment and operating income of about $460 million. So okay, great information from them. And then if you guys, I'm not sure if you guys are familiar with how their earnings call goes. They end the big banks or have representatives that ask questions to the team of Disney, and I highlighted some of the questions I liked. So this is a question that was asked that they'd like to hear from the CEO, that now that they own Fox, what do they think the biggest opportunity is running this company and integrating into Disney, or opportunities as they look forward. So obviously they're talking in regards to, remember when they bought off Lucas, when they bought off Marvel, and when they bought off Pixar. These actual companies, right? Lucas, for example, had the Star Wars. It was pretty much Star Wars the whole. So they had the ability to go on from here. So now they're asking how they're gonna use Fox as a whole to become even bigger. So here, the CEO responds that he's talk. First, he talks about library, the brands they're buying and titles, but also the people at Fox. So just like I mentioned before, and he says it here, Fox has people, and those people that work there are also assets. He mentions they are critical to essentially enable us to fulfill their goals to relate it to direct to consumer. And here he continues, I can't emphasize enough the importance of the people. So again, he definitely says that the people are definitely an asset from Fox. And here he mentions, he says that Pixar and Marvel and Star Wars were more brand focused, right? We had, like I mentioned, Marvel had all these superheroes, which is pretty brand located, where Fox is so generic that it doesn't have a brand as a whole. They're getting a little bit of everything. They got some strong brands. Nat Geo, The Simpsons are a good example of that. But they also have brands that they feel they can strengthen by fueling them with more resource to create more products using those brands and put them front and center of their new platforms, Disney Plus, right? So now they have plenty of more new content to release, which I think is great for them. And that's actually it for what I have for Disney. On the next episode, like usually this is a two-part episode. On the next episode, I'll take a look at the actual numbers and we'll take a look at how Disney is. But I'm a huge fan of the company right now. They're actually doing pretty smart moves, in my opinion, for future growth. So we'll take a look at the numbers next time. Don't forget, guys, to subscribe to my channel so you guys get updates on when I post new videos. Take care, guys, and see you next time.